Hi, welcome to the Interaxis YouTube channel, Interaxis.io. Today we're going to talk about token sets, and this goes along with our theme of financial management, of asset management, and the financial architect in the decentralized finance and in the crypto world. So token sets and the set protocol is something we've actually talked about, we've had a video about in the past, but I don't believe we've actually done it since they actually released token sets and social trading. So real quickly to go back, what token sets are, or I guess what set protocol is this ability to almost build it, as they say, it's kind of a robo-advisor for, in particular for the decentralized finance world. And so what you can do using their protocol is kind of build your asset management, kind of build a fund or build a way to actually trade assets, trade DeFi assets in a programmatic way. So some of the examples might be if I wanted to, or they actually release some of these token sets eventually where they use their own protocol and release these. So for example, if I wanted to always have a 50-50 split of ETH to Bitcoin, I can buy the 50-50 ETH Bitcoin token set. I can put a certain amount of money, a certain amount of DAI or ETH into this particular set. And what's going to happen is it's going to watch this this balance here, and if this gets out of balance, if it gets to be say 55-45 ETH to Bitcoin, it's going to automatically rebalance me back to 50-50. Now this is pertinent. If you saw the video we did on financial architects, this is pertinent because in the traditional finance world, we do a lot of things like we talk about 60-40, 70-30. Okay, rebalancing is so important. Okay, so if you have 60-40, 70-30, this is usually in the traditional finance world how we call, for instance, equities to fixed income. Okay, so this would kind of be like stocks to bonds, something that provides some sort of growth versus some sort of income. And it's really important to rebalance. We did another video where we talked about a Bitwise, or a report from a company called Bitwise that talked about you having Bitcoin in your overall portfolio. And even if you bought Bitcoin at its peak around $20,000 and held it till now, but rebalanced your portfolio to where Bitcoin was always 2.5% of your portfolio, you still outperformed just having a regular 60-40 portfolio. So rebalancing is so important when you have assets that may or may not be exactly correlated. So if you always want to have a 50-50 split of ETH to Bitcoin, and ETH goes way up in value, okay, the point here is if ETH goes like this and Bitcoin goes like this, and you want to, what you want to do, and it's hard to do sometimes, is to sell the ETH. Okay, so a better example might be, let's say ETH does this and Bitcoin does this. Okay, and I know I have them correlated kind of funny, but at this point, if you were to sell ETH here and use some of that to buy Bitcoin, now you're not selling all of it, you're selling like 5%, and use that to buy Bitcoin, well now Bitcoin's going to go up and ETH is going to come down. So now you're going to sell the Bitcoin here and buy the ETH here. So you're always selling what has gone up a little bit in relation to the other and buying the one that has gone down. So the theory is that your portfolio is going to outperform. Well, set protocol and token sets have given you the ability to do this, to create this auto rebalancing that we see quite a bit in the traditional finance world. In traditional finance, we don't always see the auto rebalance. A lot of times we as financial advisors have to go in and do this for our clients. Set has given you the ability to either build your own or buy these token sets that just do it for you. And so if I always want to have this balance, I can do it. Well, of course, at Set, some of the other token sets they created involve things like technical charting. So I think they have a 20-day moving average ETH. So basically, the 20-day moving average is a technical term where you look at the moving average value of a particular asset, and if you look at something like the 20-day or the 200-day moving average, those are usually lines that you follow. So if ETH is going like this, the moving average might be coming through like that, and once the technical charts usually show that if it hits this moving average, it might pop. If it breaks down below, then it might go down here and come back up here and hit it and go down. That's generally what happens with the moving average. So they built a token set that says, okay, if ETH goes above or below or it hits it or something, something's going to happen to this particular token. Now the great part is, I'm actually buying the token. This token represents my ownership of this, and the token sits in my wallet. So the value of the token is based on the underlying assets. I don't have to go make these trades. If we go back to what I just talked about, if it's a 50-50 ETH and Bitcoin, I don't have to go buy ETH and Bitcoin. I just buy the token, and the token represents my ownership in 50% ETH and 50% Bitcoin. They're going and buying it, and they've actually programmed it to do this. Now, here's where things have gotten interesting, is they've taken, it used to be just kind of ETH Bitcoin, it used to be assets like that. They've added several assets that can be managed, like Chainlink, for instance, is one of those that can now be added. So now I can have an ETH Link token. So and then they've even taken this a step further, and they've introduced social trading. So with the social traders, these are folks that have proven, remember, we're doing this all on chain. I apologize that my marker's not really working, but we're doing this all on chain, so we can actually see, this is very transparent. We can see what's happening with these particular assets and how these traders are doing. So there are people that have applied and shown what they can do in terms of trading, and they have some sort of algorithm they built or a way of trading or assets that they're going to own in certain proportions in a portfolio, basically, and we're going to be able to track it. And once you've kind of proven yourself that you're really good at this, you can have your particular token set that you built available on the TokenSets website for others to buy. Okay, this is analogous to essentially being a fund manager, but you can go prove yourself first. So I can build my algorithm. My algorithm might say, I'm going to have a certain percentage of ETH, Link, Bitcoin or something, or I might build an algorithm that looks at trading, and I'm going to buy and sell at certain points. I might build it in a certain way. We're going to track the results, obviously, because this is transparent, it's blockchain, everything can be tracked. And then if it turns out that I'm good at this, that the protocol or the fund I've built is performing well, I can go offer it as a token that others can buy and have sitting in their wallet, and they're going to do whatever I'm doing in my particular kind of fund that I built, in my set that I've built. And they get access to it by just buying that token, and I, as the person who created it, can get paid a little bit of what others are paying to be part of that set. So I essentially get to be a fund manager. If I go create this great set here, if I go create this essentially this fund, I can get paid for other people coming in and buying more of these sets from actually from the chain. They're not buying it from set, they're just buying this particular set, they're buying this particular fund, and I can get paid for it. That's where we get into being kind of a financial architect. I can look across the range of DeFi apps or DeFi tokens that TokenSets, the protocol, the set protocol, gives me the ability to manage, and I can create essentially my own fund. And I can do it in a programmatic way, I can do it based on technical trading, I can do it just based on choosing some particular assets that I want and creating a certain portfolio mix. However I want to do it, I can do it, and then of course it's tracked, it's very transparent, you can actually see the performance of it all the time. This is where I can be this financial architect. I can figure out a good system, and I can set it and forget it, no pun intended, and get it out there and be actually earning some money and helping others to be able to grow their wealth. This, of course, is going to take off even more when you start talking about real-world assets, when SET starts adding the ability to add other tokens on top, other Ethereum tokens, and if they eventually start adding the ability to perform other DeFi, other money Lego type applications and protocols, like if I can add lending on top, and if I can add liquidity pools, providing liquidity and getting those fees on top, and liquidity mining and everything on top of this, I'm going to be able to, people are going to be able to create these amazing sets that are going to be either very customized or hit certain targets. Certain risk profiles are going to be able to be hit. So this is going to be really interesting, and Set has built this, and it's actually been out for quite a while, but when they launched TokenSets, when they actually built on their own protocol and launched them, is when it really started to take off. So we really like this as an avenue where some of these financial architects are able to start building their own kind of mini funds, get them out there, see what they can do. They're transparent, so we can all watch and see the growth. And maybe those people eventually have a whole bunch of token sets and eventually transfer into some other type of fund management that might go beyond Ethereum. It might go onto other chains. It might go into real world assets. It might go into traditional finance, whatever it might be. But they can use this and the programmatic aspect and the money Lego and the composability aspect of this to start down that journey. So when we see the financial architects and the next generation of asset management, Set Protocol is one of the places where this is going to be built. So if you go to TokenSets, you can find this. We will of course link to it. Again, we're not giving financial advice. We're not telling anyone to do this, but it's really interesting in terms of how you can take a protocol like this and learn how to build some sort of almost like a fund that others can invest in. And it's, again, on the Ethereum blockchain. It's trackable, it's auditable, we can see exactly what's happening, and you as the financial architect, if you want to do this, can actually start to get paid. So that is a little bit about TokenSets, one of these protocols that we like for building the next generation asset managers and financial architects.